In this video, we're going to be going over exactly how much dividend income I made in the month of November from a $247,000 account, and to analyze my portfolio, we're going to be jumping into the ticker data portfolio tracker, looking at my investment dashboard, my dividend calendar, my daily dividend calendar, and like always, we're also going to be projecting out what my portfolio will look like in the future so we can see exactly how long it will take me to achieve my long-term goal of one day living off dividends. And like always, if you'd like to be able to download this spreadsheet and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials directly into your spreadsheet, then you can head over to tickerdata.com at the link in the description. I'd also like to say thank you to Dividend Wealth for sponsoring this video, but more on that in just a little bit. Now let's dive into the video, and immediately to start off, if we go ahead and zoom in, what we can see is my portfolio value is sitting very close to $248,000, and the total gains is a little bit above $75,000. So if you simply compare the gains to the portfolio value, you can see total gains is around 40%, but that's really not the best way to analyze this, because what we're looking at is simply a absolute dollar gain return. So for example, if I invested $10,000 into a stock and then saw $1,000 of appreciation, that'd be a 10% return. But then if I invested another $10,000, then the absolute dollar return would look significantly lower because it's not accounting for the timing of those cash flows. And I'll go ahead and show you what I mean. Even though absolute dollar returns is only around 40%, you can see many of my top positions have done extraordinarily well. For example, Broadcom, I'm already up over 667%. Microsoft, my largest individual holding, up 85%. I have some financial stocks that have done extremely well also. JP Morgan, nearly 200%. Bank of America stock, over 103%. And then a lesser known stock, Jefferies Financials, I'm up about 96% on that position. And there's obviously plenty of other winners, such as Caterpillar, 227%, Apple stock, 103%, ASML, which was a stock I talked about a lot at the beginning of this year, and then it exploded. I'm up about 62.5%. So overall, I'm really happy with the positions in my portfolio and how they've performed so far. But with that being said, we do have to keep in mind, we're in the midst of a major bull market. Year to date in 2025, it has not been hard to make money. I want to be extremely clear about that. But despite this, the CNN Fear Greed Index is actually in extreme fear right now. So yes, my portfolio has done very well, especially in the last 3 or so years. But the reality is a lot of the people who actually outperform the market, they start to see a lot of separation from the S&P 500 when the market actually pulls back. And that's because over the long term, stock prices will always reflect the underlying cash flows of the business and the ability of the company to continue to grow cash flows. Simply picking stocks with a lot of volatility during bull markets can actually lead to decent returns, but when the market pulls back, your portfolio will get destroyed. So we're looking for high quality companies with strong underlying cash flows that can continue to grow their cash flows. And for the most part, I think that's exactly what I've been able to do while building my portfolio. And we'll get to that in just a moment. Right now, we can see my allocation is about 91% stocks with about 30 total holdings, which I am aiming to trim closer to around 25. Now, if we look at my cost versus market value chart, you can simply see positions, how much I put in versus how much it's currently worth. So for example, if we look at Visa, I've invested about $10,200. It's currently worth closer to around $15,000. Now, we have already glanced at my growth positions, but I do want to point out, while I consider myself for the most part a dividend growth investor, someone looking for stocks growing dividends at a high rate in the future and seeing high total returns, I do think there's also some high yield opportunities out there that oftentimes get overlooked. And the few high yielding positions I have in my portfolio have done so well. EPD, this was a stock yielding around 8% when I bought it in my portfolio. I'm currently up about 72.68%. Altria, I bought this stock when it was yielding over 9%. I'm up about 57% on this position. And then the newest high yield addition to my portfolio was MPLX. I added this just a little over a month ago, and I'm already up about 13.57% on this position, and this was a stock yielding around 8 to 8.5% when I added it to my portfolio. So if you're someone who recently was told that high yield always means high risk, that's not necessarily the case. There's absolutely high yielding opportunities out there, and I cover lots of high yield opportunities over on my newsletter and website, dividendology.com. I provide tons of free research and resources and do in-depth analysis of high yielding opportunities. So be sure to check out Dividendology at the link in the description, or you can just simply scan the QR code that I'm putting on the screen right now. Now, if we just quickly glance at my allocation, you can see I do have a decent chunk to the Dividend Growth ETF SCHD, but my largest individual position is Microsoft at about 6.7%. Then we have Visa, and then we have AVGO Broadcom. So again, this is a dividend growth oriented portfolio, and for the most part, it's fairly well diversified, whether you look at it on an individual basis or simply on an allocation by industry basis. But let's go ahead and see what everyone wants to see, and that's how much dividend income I made in the month of November. But first, I want to say thank you to Dividend Wealth for sponsoring this video. Dividend Wealth is extending their Black Friday/Cyber Monday sale exclusively for Dividendology subscribers. If you're still tracking dividends by hand, then you're guessing. Dividend Wealth shows you your estimated annual income, as well as your payout calendar instantly. No more manual updates. I love that Dividend Wealth tells you exactly how far away you are from achieving your annual income goals. In this example, I'm 23% of the way there. Now's the time to quit guessing and take advantage of the 50% off lifetime subscription. So be sure to check out the link in the description to get access to Dividend Wealth at its cheapest price ever. If we go ahead and zoom in and look at my historical monthly dividend income, you can see in the month of November, I made exactly $327.62 in dividend income. Now, the most frequently asked question on this channel is always, why don't I make more in dividend income? And this is actually a great question. Most people who claim that they're dividend investors are looking to maximize their dividend income right now. But what you have to understand is if you're a long-term investor, you can actually maximize dividends over the long term by being a dividend growth investor. This is something I always love to talk about because if you're new in this area, it doesn't get discussed very often. What we can see charted out right here in the red is a dividend growth stock versus the blue, a high-yielding stock. Obviously, in the short term, high-yield stocks will pay out more in dividend income, but dividend growth stocks that continue to grow dividends at a high rate over time, will actually pay out more in dividends over the long term. And this is true whether you don't reinvest dividends or even if you do reinvest those dividends. Now, this is such an important concept to understand. So you can see, well, my expected yearly dividend income right now is about $7,438, and my average monthly dividends is sitting at around $620. These numbers could absolutely be much higher if I was focused on high yield investments right now. But we have to remember, a stock's ability to pay dividends is actually determined by how much they're generating in free cash flow. For example, if we just look at Microsoft, again, the largest holding in my portfolio, the data will load in thanks to ticker data, and here's what we can see. If we zoom in, we can see back in 2014, Microsoft was paying out about $1.15 per share in dividends, but by 2024, this was up to $3.08. They more than doubled the amount they're paying out in dividends. Now, what's interesting about this is if we actually look at the free cash flow versus dividends paid out, every single year, free cash flow is growing much faster than the rate they're actually increasing dividends. Now, remember, dividends are paid out of free cash flow, so a company's actual ability to pay you in dividends is determined by how much they're generating in free cash flow. Any free cash flow that isn't used to pay dividends can be used to do things like reinvest back into the business or mergers and acquisitions, buying back shares, or paying down debt. So the reality is the free cash flow is the lifeblood of the business. So just as a quick example, if we look at my three largest individual holdings, Microsoft, Visa, and Broadcom, here's about how much they're paying out in dividends and how many shares I own. So this is how much each position is paying me in dividends. In total, these positions pay me around $268. But look at how much they're generating in free cash flow. Their free cash flow per share is significantly higher than the amount they're paying out in dividends. And so the total free cash flow these positions are earning me is about $860. And on top of this, these are companies growing free cash flow at typically at above a double-digit rate. And as a result, because of that, those stocks are typically increasing their dividend payouts at a double-digit rate as well. And on top of that, share price over the long term is determined by how much free cash flow a company is generating. As free cash flow grows, yes, the dividends will grow, but the share price will grow along with it. This is the exact reason that we typically see dividend growth stocks outperform the market over the long term. And on top of this, yes, we can see my portfolio value growing over time. We can see my dividend income by each individual stock, or even look at my allocation by industry, but pay close attention to my projected annual dividend income every single month. What do you notice about this chart? It doesn't look anything like a share price appreciation chart. Instead, it only goes up and to the right. And this is what's beautiful about dividend growth investing. Every single month, the amount you're projected to make over the next year in dividend income only climbs higher and higher. And while there's a multitude of benefits to this, including psychological benefits forcing you to keep investing over the long term, in my opinion, the biggest advantage is what it does to sequence risk. Now, sequence risk is not talked about often, and what a major mistake that is. Sequence risk is basically that the danger that the order in which your investment returns occur can really hurt your final outcome, even if the average returns actually look pretty decent. So let's look at two examples of people who are retiring. What we can see in the blue and in the green, these two examples, both investors achieved an average return of 4%. But we can see Investor Blue had good results to start and bad results to end, while Investor Green had bad results to start and good results to end. Again, the same average return, but despite having that same average return, Investor Blue had $70,000 more than Investor Green due to the sequence of their returns. So for example, someone who was looking to retire during maybe the dot-com bubble, the global financial crisis, or even 2022 when the market simply dropped by about 20%, all of a sudden their ability to retire was greatly diminished if they were planning on using things like the 4% rule and selling out of positions in their portfolio. But dividend growth investing completely fixes this issue. That's because, again, you aren't forced to sell shares. Your portfolio every single month continues to pay out more and more in dividends, even if you stop reinvesting those dividends, because the stocks will increase their dividend payouts. Now let's move forward and look at our dividend calendar. And basically what we're doing is we're looking at how much each position is paying me and how much it's historically paid me. And one of the reasons I like dividend calendars is, although it looks like there's a lot going on, it's pretty simple and it allows you to see dividend growth over time. And the easy example I always love to use is Realty Income, a position that's paid me over $939 in the last few years. But the reason this is a good example is they actually pay out dividends every single month, and they grow their dividends on a quarterly basis. But because I also reinvest dividends, you can see every single month, the amount they pay out in dividends to me is actually increasing. So by March of 23, it was up to about $8.41. Just a few months later, December of 23, around $25. And if we move forward all the way to this most recent payout, this was the first month they actually paid me over $30 in dividends. So we started at around $5, and just a few years later, we're now at about $30. But let's go ahead and look at how much each position paid me this month. EPD around $21.97, that's a high yielder. O around $30, Starbucks close to $19, Lowe's over $30, Texas Instruments $55.66, Caterpillar $6.37, Jefferies Financial around $24, Apple a very small payment of about $2.65, but keep in mind they typically use most of their capital to actually buy back shares, not pay out dividends. Then we have ASML around $9.51, and MPLX, one of the high yielders in my portfolio, paid me $128.10. So if we look at my daily dividend calendar, and let's just go ahead and zoom out a little bit more, but what we can see is so far through 2025, they paid me around $5,587. And if we look at where I was just a few years ago, that's obviously a significant increase. So it's clear that the dividend snowball effect is absolutely taking place, and I can see exactly what days I was paid dividends. If we go ahead and zoom in, we can see it looks like the 5th and 6th were decent days, and then the middle of the month, I received quite a few dividend payments as well, over $200 in a span of about 3 days, a couple of payments on the 19th and the 20th, and then the back end of the month, I saw a couple more dividend payments. But now we need to answer the question of how long it will take me to achieve my long-term goal of one day living off dividend income. And like always, to do that, I built out a model to project what my portfolio will look like in the future. Now, if you've been watching the channel for a while, you already know the assumptions I use. I basically take the starting portfolio size and then assume a price growth rate of 7% and a dividend growth rate of 7%, both of which could absolutely be higher in the future, and over the last few years, it's certainly been higher as well. Now, the target monthly contribution is around $2,500 every single month. With that being said, there is quite a bit of fluctuation. I have months where it's considerably higher and months where it's certainly lower. And in fact, this month, I actually didn't contribute any new capital to my portfolio. I simply reinvested dividends back into my portfolio. But with that being said, we're going to project out what my portfolio will look like in the future. So let's jump over to my live off dividends analysis. Now, if we pay close attention to the chart right here, the red is my monthly dividend payments, while the black is my monthly cost of living. And what you'll notice is my monthly cost of living actually increases over time. And this could be due to a multitude of factors, but the reality is that inflation compounds over time, just like any other investment. And that's the number one risk we have to be aware of. So let's see exactly how long it takes to get to this point right here where monthly dividend payments actually surpasses my monthly cost of living. If we go ahead and zoom back in, let's start scrolling down to see how far away we are from achieving this goal. What we can see is by year 5, we're still not there, even though monthly dividends is starting to get close to around $2,000 a month. That'd be pretty great. If we keep scrolling down, we can see by year 10, no, we're still not there, but monthly dividends is around $3,763 a month. If we keep scrolling down, we can see right here, this is the point at which we could live off dividends forever, and it's just a little over 13 years away, where monthly dividends would be $5,216 and monthly cost of living $5,191. And here's what's beautiful about this. Even if I stop making contributions to my portfolio at this point, and if I stop reinvesting dividends, I could still live off dividends forever as long as the dividend growth rate in my portfolio is higher than the rate of inflation, which when I own stocks like Microsoft, ASML, Visa, and Broadcom, those are stocks growing dividends at a significantly faster rate than the rate of inflation. And again, that's the beauty of dividend growth investing. Now, if we look at this on a much wider scale, let's go ahead and zoom in and look at my future portfolio outlook. 15 years from now, if I reinvest dividends, I could be making around $77,000 a year, and if I don't reinvest dividends, it'd be around $51,000. But look 30 years from now, if I don't reinvest dividends, around $168,000 a year, and if I do, basically $400,000 a year. That's the power of the dividend snowball effect taking place. So there you go, that's exactly how much dividend income I made in the month of November from a $247,000 account. Again, if you'd like to get access to this spreadsheet and the ticker data add-on that allows you to automatically import stock financials directly into your spreadsheet, then you can head over to tickerdata.com at the link in the description. If you want to get access to more dividend growth and high yield insights, then you can go over to dividendology.com at the link in the description, or again, you can simply scan the QR code that's on the screen right now. And again, finally, I'd like to say thank you to Dividend Wealth for sponsoring this video. But with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.